Hello, folks, and welcome to your on-chain update for the 6th of December. As the astute will notice, my voice sounds like absolute garbage, so I'm a bit crook. So if you'll just bear with me, we'll jump right into it and just give you a bit of an overview of at least what I'm seeing across a couple of things. We posted yesterday about the entity balance change for BTC. We'll revisit that, and we'll also have a look at one that I just rolled out for Ethereum. Now, the reason I like to show you guys those is they are essentially behind the professional paywall, so it kind of gives you a bit of an insight into the balance change, the actual supplier movements, which I think are more important, rather than address counts and things like that. So give you a bit of an insight on what's going with BTC and for ETH. But also, I want to start with on-chain activity because there's a bit of an interesting dynamic that's going on, and I just wanted to explain what my thoughts are on what's going on. So really, the starting takeaway, you can see there's been a bit of an uplift in overall active addresses, right? Now, it's still well and truly within our, call this a consolidation range of the bear. We don't have any kind of significant uplift to the, something to write home about, but it's something that's showing that there is more activity on chain. So let's just dig into that a little bit further. So we have on our new address momentum, we do have a break above the yearly. We've got some kind of upside momentum, but remember, this is looking at new address momentum. This is looking at kind of new users. The same can be seen on like new entities, which is our T3 variant. But overall, what we're seeing is there has been an influx of new entities or users, so to speak. But what's really important is how much value are they moving around? Because you can have a whole bunch of new entities, but what is the economic value of those transactions? So something that I've noted is we've got our number of addresses with a non-zero balance has seen a bit of a downtick, and our UTXO set has seen a lot of UTXOs getting destroyed on net. So what, and some of you may have seen chatter about this, essentially Binance has been doing a huge amount of wallet consolidation. So they filled up the mempool with all these transactions that were basically taking customer deposits and combining hundreds and hundreds of them at a time into their hot wallet or their cold wallet. So what we were seeing is a suite of UTXO destruction, really economic transactions that aren't necessarily economic. Lots and lots of new addresses being moved around. That's real. That's actual people withdrawing. So that new address activity is real. But there's more UTXO destruction going on by exchange wallet management than there is by new addresses. So it kind of gives a bit of a flavor that maybe it's not quite as foundational. It's not really a strong move higher. If we get continuation, thumbs up. But right now, just something to be paying attention to, and just let's see if over the coming weeks, because it looks like this Binance process has slowed down now. Let's have a look and see whether we do get some kind of longer term follow through, because that would be a good sign. That's kind of like long term holder supply. It wants to go up, and when people are spending, it offsets it. If you take away the offset and it keeps going up, that's a good sign. So that's what we're really looking at here, but somewhat in reverse. Now, I mentioned that the volume side. Let me just jump down to this metric here. We've looked at this before, total transfer volume. I really don't need to point out too many things here. This is a shocking looking chart, right? It's just horrendously down only. We have very, very little transaction volume going on at the moment. It does look pretty dire. It actually looks the same way for both Bitcoin and Ethereum, so there's no real delta there. We're essentially in a period of time where the amount of volume that's moving around is pretty low. Now, what I want to highlight here, this is our relative activity of small and large entities. So it's a bit of a mouthful, but red means when red's higher, there's there's a larger mean transaction volume, which means that there's more big entities. When blue is higher, it means there's more retail, right? Now, retail is pretty flat, right? So retail, and by the way, this is not the worst thing. Retail tends to be flat to climbing during bear market floors. We do see this. Retail seems to be the first one willing to step in. I don't know whether this is because Bitcoin is a grassroots phenomena, or institutions just continue to get stuck in their fiat ways and they can't get their heads past it. But you can see that the mean transaction value looks much the same as our transaction volume chart. So we are seeing institutions and larger holders out of the space, and we are seeing a dominance of retail. Right now, that may sound dire, and it's obviously not great because you do want to see basically all entities. You actually want to see both of these metrics rising, but seeing one diverging lower, one going sideways to up is what we do actually tend to see near bear market lows. However, not nearly to this kind of scale. So I would put this into the semi-bearish bucket, that we just don't have larger scale institutions coming in and moving value around. We'll see whether that sticks or if it's just a shorter term event. And I mean, here you go. Look at the RVT ratio. This is looking at the amount of transaction volume to the on-chain market cap. High values, of which this is one, are bad because it means that essentially Bitcoin's realized cap is overvalued relative to the amount of transaction activity that's going on. So as you can see, I think this is actually all-time high. You can see it over here. I mean, it's dire. So we do not have transaction volume. The utilization of the Bitcoin network is extremely low. High values are not great. Granted, we see those near bear market bottoms, but who knows when this thing reverses? It's screaming higher. So we really do have a massive amount of activity flowing out of the space. And that's pretty much it on the on-chain activity front. Now, I'll briefly go through the Bitcoin side, but I actually want to get across to the Ethereum side because I recently built this today to give you a bit of insight on what's going on there. The post that we looked at yesterday was looking at the overall balance change. Now, this is our cleanest data using entity supply changes. As you can see, shrimp, they're just blowing everything out of the water. Let me actually just zoom all the way back. You can see the scale of this thing, right? Kind of looks like the RVT ratio, except this one's not a negative. Shrimp are absolutely stacking sats. It's quite wild to see. But as I pointed out yesterday, an important piece of nuance here is that the blow up of FTX is going to motivate people who had already bought their coins and were just using custodians, right? Because they didn't take self custody. We saw record sales months from Ledger, Trezor, Coldcard. So what we're basically seeing is a bunch of people who probably had coins and are only just now taking custody of them. So even though we've got these massive upticks, I think it's a good thing. I don't necessarily think that it's all buy side demand. Some of it, of course, is, but it's not all buy side. Same for the crabs, historic highs. The fish to sharks, really, really good to see this upticking. And as I pointed out yesterday, the whales have been very, very flat. Now, this is partly going to be associated with that on-chain activity observation that we had, where the on-chain activity is kind of signifying it's mostly retail, so we're losing that whale dominance. But simultaneously, custodians know those damn whalebot Twitter algorithms are out there. Every time their client moves 1,000 BTC around, this thing's posting saying, look, 1,000 BTC moved to Binance. No one wants that, right? Whales are smarter than that. They're going to break up their coins into 10, 100, 50, 200, 500 lots because then they don't trigger these stupid whale alert bots. Anyway, so I would suspect that a lot of that whale demand, you can see how this is just hockey sticking higher. It doesn't happen very often, right? We really don't get this particular cohort adding at that rate. You can see here was the bull market, but that's pretty much it. There hasn't been an instance quite like it ever since. So it's kind of historic, but I would suggest that a huge portion of this whale demand is going in here. And just for a sense of scale, this is 150,000 BTC per month, right? These are big numbers. So that's my general view on the BTC side. So as promised, here's the Ethereum side of the equation. So Ethereum is obviously a slightly different beast. Everything is off by a factor of 10, so to speak. So 1 BTC is equivalent to 10 ETH, right? Just on a relative approximate scale, right? 120 million coin supply versus 21, maybe it's off by a factor of 5, whatever. It doesn't really matter, but same kind of approximate ballparks. That said, everything's labeled the same. So shrimps are still 1 ETH, crabs are still 1 to 10, so on and so forth. Now, interestingly, the shrimps have actually been in distribution mode. Now, I would suspect now, just by the way, these models are not entity adjusted. It's much, much harder to entity adjust, if you can believe it, for account-based models like Ethereum. It's just a whole different ball game. It's a different type of science. Anyway, so what these models do, they do include exchange wallets inside these, right? So it doesn't include smart contracts, but it does include basically any other address that's not a smart contract, including exchanges. So my best estimate here is that this is actually the same as Binance. It's consolidation of wallets over the course of the last bear market. I suspect that's what's going on. Because as you would know, when you deposit ETH to an exchange, you've got your own wallet, and then they all get sucked into the hot wallet over time. So that over time consolidates. So we've actually got a decline in shrimp balances, but getting into a more kind of reasonable sum. Once you go to the 1 to 10 ETH, we do have a significant uptick, right? This here is about 375,000 ETH over the course of the last 30 days. Now, it's had a bit of an uptick, but is starting to cool off just a little bit. So it's kind of pulled back to 330s. What's that? It's about a, 10% decline in overall. So we have seen a bit of a decline in the crab addresses. If we look at our fish, this is 10 to 100 ETH. So again, this is a pretty sizable portfolio size. 640,000 ETH per month moving into these wallets, albeit starting to cool off. So you can see here, there's the FTX collapse. You can see this massive push higher up till the 18th of November. Then it starts to flatten out just a little bit. So I do actually suspect that these will start to cool off a little bit. Makes sense after the shockwave event. Most people who were going to withdraw have withdrawn. And I would suspect over the coming probably 2 weeks, we'll move into real demand-driven markets. So when we're seeing outflows, it will reflect people who are putting fiat in, buying coins, withdrawing, because that sentiment of self-custody will remain. But the people who were going to withdraw coins that were just held on the exchanges, that's done now, right? They've got their hardware wallet, they've loaded their coins on. Now we're into the buying regime. So we can look at how these things play out over coming weeks. And that kind of explains this softening out of the trend. We're now in the demand phase rather than the get me the hell out of here phase. Shark, this is 10 to 1,000. Again, same kind of topic. We're seeing here institutions just like, get me the hell out of here, taking coins off exchange. This is 540,000 ETH per month. And much the same, you can actually see there's our initial shockwave and there's the smoothing down, right? You can see this overall gradient is significantly steeper than this one. Bit of an uptick recently, right? So we'll see how this plays out. But it does look like we've seen a bit of a slowdown following probably about the same time, right? 18th of November. Yeah. So after a couple of days, people have kind of done their dash. Now, whale net position change. Here we're looking at whale addresses. This is 1,000 to 10,000 BTC. We have seen an uptick here. This is about 300 to 400,000 BTC per month. As I mentioned, some of these will include exchange addresses, although we are seeing exchange addresses declining. Nevertheless, there will be more supply as it gets consolidated into hot and cold wallets because people who are depositing are still adding coins, right? Because remember, there's a net flow. The net flow is to the outside, but net flow versus total flow is insignificant, if that makes sense. So if you look at the inflows minus the outflows, that number is like 5% of the total inflows plus outflows. There's a whole lot of coin that flows in, but they almost net each other out every day. So that's kind of just showing you that a lot of this will be exchange wallets. And actually you can see here, his mega whale, so to speak, 10,000 ETH plus. You can see that this is declining at 1.3, I think it's 1.3 million ETH per month, right? Or 1.7 million ETH per month. So what we're getting is probably a bit of consolidation between these different wallets, flowing between hot and cold. It may also just mean that some of these, 10,000 ETH is a huge amount. And again, doesn't include smart contracts. It's a little bit muddier, so don't put too much stock in these two, just because it's a lot harder to read this. I'm still in the process of kind of digesting these things, particularly for ETH. It's obviously just it's a different beast. But anyway, hopefully that's a useful view. So far, we pretty much have the same overall behavior patterns that we've seen across all these cohorts, whether it's for BTC or ETH. I'm still pretty unenthused or uninspired by what I'm seeing in the on-chain activity space for BTC. It is going to be a leading indicator. It's telling us there's something to pay attention to, but we're not there yet. So as I've said many times, be patient, sit tight. We'll see how this plays out. But at the moment, I'm not kind of seeing anything that's saying we're going to all-time high soon. So patience is going to be the ticket. Anyway, hopefully that's useful. See you in the next one. Cheers.